Central banks are purchasing gold at more than double the historical rate, with over 1,000 tons annually in recent years. A key factor is de-dollarization, cutting back on US dollar reliance due to instability. Gold is sought as a proven safe haven against persistent inflation and global economic volatility. Gold is a safe asset that shields against sanctions and financial isolation, like with Russia. This isn't a temporary trend. Most central banks believe global gold reserves will keep rising, changing how nations view security. The world's central banks are quietly building a financial fortress with gold, preparing for a less predictable global future. For thousands of years, gold has been the ultimate symbol of wealth and power. It built empires, funded wars, and backed the world's most trusted currencies. Then, for decades, it seemed to fade into the background, a relic in a digital, dollar-dominated world. But something has changed. A silent, massive shift is happening right now in the vaults of global power, not by speculators or miners, but by the world's most conservative financial institutions, central banks. And they rebuying gold at a speed and scale we haven't seen in modern history. This isn't a story about finding treasure. It's a story about preparing for an uncertain future. And it's a story that asks a fundamental question. What does it mean when the guardians of the global economy start quietly stockpiling the oldest form of money? Let's look at the numbers. They tell a stunning story. For over a decade, central banks bought about 400 to 500 tons of gold each year. Solid, steady. But in the last 3 years, that number has more than doubled. We're talking over 1,000 tons every year. Just in the first half of 2025, they added another 410 tons. The faucet isn't just on. It's wide open. And the buyers aren't who you might think. While America still holds the largest stockpile, the most aggressive buyers are nations like Poland, China, India, and Turkey. So what's driving this gold rush among bankers? The first and biggest reason is a quiet move away from the American dollar. For generations, the US dollar has been the king of the global economy, the default currency for trade, the bedrock of national reserves. But confidence is cracking. Think about it. Government shutdowns, a towering national debt, political brinksmanship. Foreign central banks are watching, and they're getting nervous. A recent survey found that nearly 3 out of 4 central bankers believe the dollar's dominance will decline in the next 5 years. They're looking for alternatives. And gold? Gold is politically neutral. It's not tied to any one country's decisions or debts. It's just gold. So, countries like China have been strategically selling off US Treasury bonds, billions of dollars worth, and replacing them with bars of bullion. It's the ultimate insurance policy. Then there's the fear that just won't go away. Inflation. We all felt it at the grocery store, at the gas pump. For central banks, it's a nightmare scenario where the money they hold loses its value. Gold has a 5,000-year track record of holding its worth when paper currencies falter. Even as some economies stabilize, the memory is fresh. And with talk of interest rate cuts, the appeal of gold only grows stronger. It's an anchor in a stormy sea. Nearly half of all central banks now admit they're not just holding gold, they're actively managing it, trading it, trying to make it work harder for them. It's gone from a dusty heirloom to a key player in the financial toolbox. But perhaps the most powerful driver is the world we see on the news every night. War in Europe, conflict in the Middle East, trade tensions that ripple across oceans. In a world on edge, gold has one irresistible quality: safety. Real, physical safety. You can't hack it. You can't freeze it with a keystroke. We saw that in 2022 when Russia's foreign currency reserves were frozen. Overnight, it showed every nation a terrifying vulnerability. Gold, sitting in your own vault, under your own soil, is seizure-proof. It's the ultimate asset in a time of crisis. Central bankers call this strategic resilience. It means that if the worst happens, if a country finds itself isolated or under pressure, it has a form of wealth that cannot be turned off. This ties directly into what experts call currency weaponization. The global financial system, the networks that move dollars around the world, can be used as a tool of foreign policy. A country can be cut off, its assets locked. That fear is real, especially for nations at odds with American foreign policy. So, they're building a financial bunker. And the cornerstone of that bunker is gold. It's a way to opt out, to create a backstop that no other country controls. So where does this leave us? The trend is accelerating. A staggering 95% of central banks believe global gold reserves will keep growing this year. Almost half say they themselves plan to buy more. This isn't a fleeting moment. It's a structural shift in how the world thinks about money and security. All this buying is pushing gold prices toward historic highs, flirting with the once unthinkable mark of $4,000 an ounce. It's a direct signal from the most powerful financial rooms on Earth. They are voting with their vaults. They are preparing for a world that is less predictable, where old alliances are tested, and where the rules of finance are being rewritten in real time. It's a quiet alarm bell, ringing in deep underground depositories from Warsaw to Beijing. They are building a fortress of gold, brick by brick, ton by ton. The question for the rest of us is, what are they preparing for?